Welcome to The Explainer. Today, we're going to connect the dots on three things that seem totally separate. A tech breakthrough, a political back and forth, and a surprise economic report that are all colliding to shape where crypto is heading.
And it really all boils down to this one question. What's actually in the driver's seat here? Is it the tech wizards writing code, the politicians in Washington making the rules, or is it just the huge, powerful currents of the global economy? Let's find out.
All right, first up, let's zoom way in, down to the micro level, to the code itself. We're looking at a pretty interesting new initiative from the Pi network that's trying to fix a massive problem in the creator economy.
Now, to really get what they're up to, you got to understand the core tech here, the smart contract. The easiest way to think about it is like a digital vending machine. You put in what's required, in this case completing a task, and boom, the machine automatically gives you exactly what you were promised. No cashier, no middleman.
So this is where it gets really cool, how Pi is putting that tech to work. An influencer creates their content, the smart contract verifies, yep, the job's done, and just like that, bam, the payment is automatically sent. Now, this isn't just about being fast, it's about ripping out the middleman and getting rid of all those potential headaches, disputes, and delayed payments that come along with them.
And the bigger picture here isn't just about paying creators fairly. It's about building an entire foundation of trust. When you automate rewards like this, you're paving the way for a huge ecosystem where developers and creators can collaborate without friction. You're really laying the groundwork for a genuine, community-run economy.
Okay, so that's the view from the ground up. Now let's pull the camera back, way back to the national level. This is where the rules of the game are being written and, well, rewritten, especially when it comes to the US government's changing attitude toward Bitcoin.
And you can really see the shift here. For the longest time, the US Treasury's official line was a hard no on buying Bitcoin. But recently, as the political winds have started to shift, that firm no has started to sound a whole lot more like a, well, maybe. And this is the phrase that's driving that change. This Bitcoin superpower idea is getting a ton of traction in political circles, especially with an election looming. So you have this pressure building. The government is kind of stuck between wanting to avoid risk and, not wanting to miss the chance to be a global leader in this space.
So what's the result of all this back and forth? Pure uncertainty for the market. This policy wobble just goes to show how directly political moves can shake up the entire crypto industry, leaving investors trying to guess what's coming next.
Okay, now let's do our final zoom out to the macro view. Because beyond all the cool project innovations and political debates, crypto is deeply tied to the powerful currents of the global economy.
And the latest shockwave? It came from a single number. The US Producer Price Index for July came in much, much hotter than anyone thought it would. It was a big signal that inflation might not be cooling down after all.
This chart shows you exactly why it was such a big deal. The analysts, they were predicting a pretty modest rise, but what we got instead was a much bigger jump. That kind of surprise immediately sparks fears that inflation is heating back up again. So, how did the market react? This table breaks it down perfectly. Bitcoin and Ethereum saw an immediate, short-term drop. That's because investors got worried the central bank might raise interest rates to fight this inflation. But then, look at Picoin. It stayed relatively stable. Why? Well, it's still in what's called a closed mainnet. It's not trading on public exchanges yet. That separation basically acts like a temporary shield, protecting it from these bigger market shocks.
Okay, so we've looked at a project's tech, a nation's policy, and a global economic indicator. 3 different stories from 3 completely different levels. So how do we tie this all together?
It becomes pretty clear that the crypto market is being pulled in 3 directions at once. At the micro level, you have technology building the future from the inside out. At the national level, policy is like the weather. Sometimes it's sunny, sometimes it's stormy. And at the macro level, the global economy is just this powerful tide that raises or lowers all the boats.
So the big takeaway is this. All 3 of these forces are tangled together. A tech innovation is only as strong as the regulatory world it lives in, and both of those can get completely overwhelmed by a major economic shift. And that leaves us with one final, fascinating question. As we move forward, which of these forces will ultimately have the final say?